Good morning. Welcome to another episode of Buypoint ASX. I'm Mac in Oz, and today we're looking at Medibank Private, MPL. Now, one of the things that is probably fundamental to using these videos is to understand that what these videos are about are not recommendations on what stocks to buy. That's up to you. Assistance is available if you'd like to reach out by email, but the real purpose of these videos is to indicate the optimal time to buy any stock that we're covering. So if you're looking at a stock and you want to know when to buy it, that's what this kind of analysis is about. The decision that you're going to have any particular stock in your portfolio is a completely separate consideration. More on that later probably, but the point, at least as far as this image is concerned with the basic black chart, is that most of the stocks, I'll let you know if there are any exceptions, but the stocks that I'm recommending in these videos are stocks which have this characteristic in common, which is that they start at the bottom left, they continue to the upper right. They are stocks with a history of consistent growth such that they are at or near their all-time highs when I speak to you about them, because the fundamental question you have to ask yourself about any stock that you're going to invest in terms of generating profit is whether or not you think that stock has already reached its all-time high, or whether or not you anticipate in 10 to 20 years the stock price is going to be higher, of course, which leads to the conclusion that there are profits to be made in the stock. Here is the more simple stock covering the period that has generally emerged as being relevant in terms of stock analysis, which is the period since COVID. Now, Medibank Private, perhaps understandably, did not suffer so much from COVID as most other stocks, and that is one of the elements to the discussion today. Is what is it about Medibank Private that has led to its extraordinary performance in this calendar year? The real incident of note with Medibank Private was this drop here, which was the market's reaction to the IT data breach that Medibank Private announced, and again, it's not a bad example of how when the market overreacts or reacts strongly to any incident, what you can expect is this kind of recovery. And you can see that with Medibank Private, the long-term growth was continuing. The incident happened, the market forgave the company, and it has continued on to spectacular growth. And the real subject of this video is what is behind this quite extraordinary growth over the last 8 months. Here we look at the more fundamental analytics of the buy point. This is the stocks chart with the simple moving average envelope up here, 20, 50, 100, 200. And you can see that the growth has been consistent. The Trump chaos had zero effect on Medibank Private. In fact, if you look at this, it seems to have pushed it up. and that is consistent with the analysis that I'm giving you today. And of course, the reason that we're talking about Medibank Private today is that it is heading below the zero line, and we can anticipate what is in fact the first real buy point of the stock, or for the stock, during this calendar year. And the essence of the what I'm going to suggest today is that, in common with this stock, Telstra, Medibank Private has apparently been adopted by the market, perhaps one particular share of the market, as a safe haven stock. So you can see the obvious correlation between the performance of Medibank and Telstra, even to the point of approaching a buy point at the same time. Absolutely zero impact from what the Orange Man was doing earlier in the year. And that again is a interesting characteristic going forward under the next 3 years with Drongo Donny. If you can pick stocks on the ASX which are going to perform independent of what Trump is doing with the tariffs, then you're going to have an additional layer of security with your investments on the ASX. But you can see the similarities between the performance of Medibank Private and Telstra are glaring. The significant thing in terms of Medibank Private is that Telstra has been a safe haven stock for Australian investors for decades. What I'm suggesting is that Medibank Private seems to have reached that status only recently, and the question, of course, is whether or not that can be expected to continue. Here we have the candlestick chart, just for those people who like candlestick charts, so that you can see there is definite resistance to sellers trying to drive the price lower. It is not what you would call a dramatic candlestick action line, but what you can see here, where it counts, is that whilst sellers have been making attempts to drive the price lower, they haven't been very successful. We have these indecision candlesticks here, and consistent with my general analysis, what I'm suggesting is that once the stock reaches a buy point on the MACD below the zero line, that is the time to buy the stock. Something else that I thought was interesting is, in terms of the similarities between Medibank Private and Telstra, is the dividend. Now, for the people that I work with, I define a dividend stock as a stock which consistently pays over 5% per annum, because you can get 5% per annum in any long-term deposit bank account. You'll see here that even though Telstra is widely regarded as a key dividend stock, apart from a couple of years back before COVID, its performance has not been such that I would call it a dividend stock. Similarly for Medibank Private, 4.5%, 4% is a decent dividend. I wouldn't have money in a stock simply to attract that dividend. So once again, what we're talking about this morning is a retreat from risk that we can see in the ASX this calendar year, with a lot of money going to safe haven stocks. The standout example of that, of course, this year is the Commonwealth Bank, but that's a very different category to Medibank and Telstra. So the analogies here between the two stocks, in my humble opinion, speak to something significant in terms of the psychology of the ASX in the period since we've all had to contemplate years of catastrophic mismanagement on the part of the most powerful man on the planet. Now, here are the standard fundamentals of the stock. You can see it's not an enormous stock, although it is obviously one of the ASX top 50. Unlike many stocks these days, it has something like a rational and sustainable price to equity ratio, but otherwise it's unremarkable. One of the things that I will suggest to you is that if you dig into the stock and look at the historical statistics, it might be this line here, underwriting profit. I hope you can see that. Now, on this chart, the significance of this virtual doubling in underwriting profit over the last 2 years, in my suggestion, can't be overlooked. Medibank is one of those stocks about which many Australian investors have an opinion, just because it is Medibank. What you make of my analysis is largely going to be a part of what else other people are saying. Here's a Google search generated brief of what other commentators in the commentariat have been saying over the last few weeks. And I'll suggest that Medibank Private's performance hasn't been about paying a larger dividend. The question is, can this performance keep up? And what I'm suggesting overall is that the market in Australia has turned to safe havens, has created a number of stocks in the upper reaches of the ASX 200 as safe haven stocks, and these stocks are going to perform in a synchronized way because the forces driving them are the same. That's it for today. Here is the disclaimer. Hope to see you tomorrow. Bye for now.